So let's just quickly review how the market was last week. A full trading week. We saw the first trading week in the new year and in the new month. Give us your thoughts on what happened.
Just taking it from the equities market, we saw significant sell-off at the first week of throughout the week in 2016, and we traced this to firstly the weak economic fundamentals still persist, and we saw last week the significant drop oil price touching a 14-year low, and lastly, also noting that towards the tail end of last year, we saw rebalancing of portfolio by portfolio managers, and we suspect that most of the portfolio managers also exited their position, realigned their portfolio back to previous positions after the reporting for the year 2015. So it was a mix of several factors weighed significantly on equities last week.
So do we expect to see this bloodletting continue this week as well? Because, of course, last week, the week is resuming from the playing host to the IMF chief, Christine Lagarde, who made a lot of comments and gave a lot of advice, especially with regards to forex restrictions and how best, we should be looking at running the economy at the moment, especially in light of global oil prices. Do you think any of this is going to ginger investors at the market?
Mere suggestion will not ginger investor sentiment. We'll first need to see some of the policy implementation. Most of what she has raised are not new, has been raised by even for domestic analysts within the country. So we don't expect that a mere comment or suggestion would improve market sentiment. Though we expect that the tempo at which the market is declining would moderate this week. So we don't expect to see the market drop by that significant amount we saw last week. But regarding the comments of the IMF boss, we don't expect that to really affect sentiment. Policy makers will weigh what they have said and try to see how they can blend and pick on some of those things which he has mentioned to formulate their policy.
So it's a good thing you mentioned policymakers, because the MPC will be holding its first meeting for the year in another couple of days, most likely next week. So how do you expect this advice and suggestions from the IMF to shape the kind of decisions they will be making at that meeting?
A challenging period within the last time the MPC met to this time. When you look at the crude oil prices that have declined significantly, and pressure in terms of the foreign exchange have continued to mount. We expect, like what is suggested, technically that the CBN should exercise some form of flexibility regarding the foreign exchange. So we are of the opinion that the CBN may review some of their stance regarding tightening the restrictions around the naira. So some of what we may also try to see in terms of trying to see how they can also allow banks to lend to the real sector. They've tried the area of trying to improve liquidity to see whether banks will channel funds to the real sector, but we've not seen significant improvement because some of the banks are still trying to battle with some of the existing loans in terms of increasing the delinquency rates they've seen in terms of the existing loans. So it's going to be challenging. We don't expect any tweak to the current monetary policy rate in terms of MPR, CRR, and also the asymmetric corridors. We feel they will still maintain the same position and see how they can persuade the banks in terms of supporting the objective of the CBN to grow the real sector.
Well, the Nigerian Stock Exchange will be holding its briefing tomorrow. What do you think will dominate conversation at that meeting?
Basically, it's an annual event. The NSC would just be giving a recap of some of the major activities that have occurred within the year, as well as some of the initiatives that they intend to implement in 2016. And when you want to look at some of the achievements they've been able to achieve, they were able to achieve last year in terms of launching the Premium Fraud Index, as well as the direct tax assessment implementation that was done last year. So those are just some of what they will discuss within the meeting.
But what do you expect they should be coming up with in 2016 that will engender more investors, to come back to the market? Because we have very limited number of domestic players investing in the Nigerian capital market, as we saw from the numbers that came in last year. With the foreign portfolio investors exiting the market, it really shows that we had not so many domestic players in that market.
Yes, I think firstly, part of what they will have to do is to still encourage investors' education. They need to see how they will encourage investors to save, because if there's no savings, you cannot invest. So as we expect that the government intends to replace the economy, they can also intensify efforts in terms of educating investors on the benefits of investing in the equities market. Secondly, they may also need to review the fee structure, such that when we did an analysis looking at fees, transaction fees across emerging markets, Nigeria still has one of the highest within the space. So they may encourage activities. They may want to restructure or reduce slightly the fee structure of transaction costs on the exchange. And we expect them to also enforce, in terms of rules, to enforce in terms of timeline regarding submission of results. So we expect them to place sanctions on companies that do not comply with the deadline or are unable to meet deadlines, so that it will boost investors' confidence, so that we don't see some of the activity we saw last week that dampened investors' confidence.
Okay, so what are your expectations now for the fixed income segment of the market, namely Treasury bills and bonds?
We expect, on the back of the significant sell-off we saw last week, we feel investors would still continue to free up liquidity. CBN mopped up liquidity last week, and it reduced liquidity within the system. So we expect that some of them will want to free up more liquidity, which will lead to slight increase in rates. We also expect, I think, this week that the DMO will be carrying out the first auction in the year 2016. We expect the rates also to increase marginally. And in light of the anticipation of increase in interest rates, as government intends to borrow significantly in 2016, investors would also be trying to position ahead of that. So we expect that in terms of the rate which they will quote would increase slightly above this current rate. And for government to be able to carry out a successful auction, they will also need to match up the rates which the investors are quoting.
Well, Ayodiji, thank you so much for sharing your perspectives with us. Do have a profitable day and a great week ahead. Of course, we've got you folks back in tomorrow to give us your analysis of the markets again.